It's now 3 years since the start of the pandemic lockdowns. And that was when we started doing these videos. At the time, we started publishing the videos because, we assumed the housing market was about to crater. There were massive layoffs, businesses were shut down, global pandemic. And I just wanted to make sure that everybody knew what was actually happening as it was happening. What we quickly learned was how wrong we were. Americans were buying homes even before the massive economic stimulus started. So we could see that in the data by early April. This year, since the start of the year, the market has also been surprising. It's much more mild, of course, than the pandemic surprise, but demand is much higher for homes than I expected at the beginning of the year. And so I'll show you the data points I'm focusing on now and what they're telling us about the current surprising housing market. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. The data we cover in these videos is national in scope, but it's available from Altos for every zip code in the US. If you need to communicate with buyers and sellers right now, they're probably misinformed about what's happening in this market. They need you to help them. So there's a link in the description below to join us and dive in. I'm Mike Simonsen. I'm the founder of Altos Research. It's now the second quarter, prime home buying and selling season. So let's look at the data. So 2 weeks after the COVID lockdowns in 2020, people were buying houses. We suddenly saw fewer homes with price cuts, and that was a huge surprise. At that time, that's when we started doing these videos, and it was, because we assumed that the market was going to be crashing, and we wanted people to understand what was happening in real time. But then the opposite happened, and the market started racing forward almost immediately. And we could see it in falling inventory data in April, and we could also see it in the price reductions data. That's this chart here. So this is the annual curve of price reductions. Each line here is a year. Look at the yellow line here from 2020. Through March, the curve was normal. Just under 30% of homes had a price cut. Then starting in April, boom, the people bought the houses, so sellers stopped cutting prices. And see the yellow line turns down. Fewer price reductions at a time of year when normally you'd expect those to be increasing. If you'd been able to, at that moment, to read what it was telling you about the future, would you have been able to act? So then compare the curve, the price cuts curve to this year. The dark red line is this year. We still have slightly more price cuts than we did back then, of course. But look how quickly this market has recovered after the first of the year. 30.5% of the homes on the market have had a price cut. That's down from 40% at the start of the year. I was talking with a big single family rental investor this weekend, and they're still not ready to start buying again. They're still kind of afraid. And my question is, did they miss their window? We can already see the demand that they have to compete with now. Should they have been buying in November? That's when their price negotiation power was best. Price reductions right now tell us that demand is sufficiently high that buyers are buying around the current asking prices. There are not any signals of further price declines in the data. That could change, of course, if the economy tanks. But as of now, the data is showing home price resiliency. This demand is met with actually surprisingly little supply. Every week, available inventory of homes for sale inches closer to the crisis shortage of the pandemic and further from the normal levels of 2019 and earlier. Americans are buying homes right now, and very few are selling. The available inventory of homes for sale fell again this week by almost 1% to 410,000. I'd assumed we'd bottomed a couple of weeks ago, and that inventory would be climbing by now. But the fact is that we have so few sellers right now that inventory still keeps falling. I'm using this year-over-year chart here so you can see how normally inventory is climbing each week by April, with the exception of 2020 and 21. Those are, middle of the pandemic and people moving to Zoom towns and interest rates at record lows. At that time, of course, we had few sellers coupled with insatiable demand. It's much more mild light right now, but it is a real trend. And when we look at the new listings rate, it just stays super low. We've been talking about how few sellers there are out there right now, and only 66,000 new listings, single-family homes this week, and 16,000 of those are already in contract. So in this chart, each bar is a week. The taller the bar, the more new listings that week. The light portion of the bar are those that went into contract immediately after listing. We call those the immediate sales. You can see how since July of last year, we are trending far fewer homes for sale than previous years. The new listings volume hasn't really picked up at all for this spring season yet. The big takeaway here is that there are no signs anywhere in the data that we have any huge surge of inventory coming. It's much more likely now that 2023 ends up closer to the pandemic crisis lows of inventory than it ever gets to the pre-pandemic normal levels. We have a shortage of homes available to purchase in this country. If the economy slows, we get big shocks, we can see how inventory would climb. It did climb last year. And we expected it to keep doing so this year. But the later we get into this quarter, the second quarter, without that climb, means the whole year is much more likely to stay in shortage. And it means that any recession inventory is probably 2024, or maybe even now pushed into 2025. And isn't that a different perspective than we were expecting even just a few months ago? By the way, next week, Thursday, April 13th, is our monthly webinar at 10 a.m. Pacific, when we go all into this more deeply, all this data. We'll share the latest forecasts of inventory for the year. The forecast is changing pretty rapidly because the data has been so surprising since the start of the year. We'll also look at the price measurements. What we can see for future home sales prices, transaction prices, and a bunch of local markets. These webinars fill up quickly, so to reserve your spot, there's a link in the description below. Click that to join us and make sure you get your spot. Home prices ticked up this week to $437,500. That's the median single-family home in the U.S. right now. Home prices are inching up each week, as you'd expect in the spring. However, each week, the comparison from last year compresses a bit more. Home prices last spring were climbing really rapidly still. And so this is why the headlines that you'll read over the next few months will still report home prices declining. Even though home prices are not declining, the comparison to last year is what's declining, what's getting worse. The median price of the new listings, these are all the homes that came to market just this week, is $400,000. That's the light red line on this chart. That's a downtick from last week, and it's 4% lower than last year at this time. The price of the new listings is a bit noisy week to week. Sometimes it bumps up and sometimes it bumps down. The important takeaway is that this is a leading indicator of where sales will happen in the future. And the leading indicator has been less and less favorable with the comparisons until last year, until May, and then that'll start to change again. What we know about housing demand is that it's far lighter than last year at this time, and we can see that prices they're not climbing dramatically from here. They're inching up maybe a little bit. Last year they were rocketing up, so. It doesn't look like the market will hit the same peak as it did last year, so we'll peak with year-over-year price declines. We can also see very clearly that home prices are not declining currently. It's a very tricky message to communicate. Along those same lines, let's look at the pendings. We have been sharing the pendings data more frequently in these videos because it shows the price points at where homebuyers are buying before the sale actually completes. So the median price of the home's pending contract right now is $375,000. That's 1.3% lower than last year at this time. Now, these are not seasonally adjusted, and it counts all the homes in contract right now across the country. And again, these are sales that are not yet complete. They're the earliest proxy for sales. These sales that are pending now will close in April and May, and then you'll see the headlines for several months out from now. The difference from last year's price is actually probably the sale price is actually going to be bigger than 1.3% because last year there were bidding wars, and so the actual sales price was closing higher than the pending price. But that's no longer true this year. So the sales price numbers will be a little wider than 1.3% decline year over year. Over the next few weeks, we expect the pendings price to tick up, but not as quickly as last year. So we'll have the same phenomenon of rising home prices, but dropping compared to last year, right? That'll be getting bigger. The home price drops happened in July and October of last year. So through June, our comparisons will be getting larger and larger. That is going to be confusing for casual observers. Prices are not declining, but the comparison from last year is declining. Anyway, we'll cover all this pricing data, lots of signals on the inventory. We'll dive into the local markets in next week's Altos Research hour-long webinar. So full hour. If you have buyers and sellers who need to navigate the market right now, you should join us for that webinar. It's Thursday, April 13th at 10 a.m. Pacific. There's a link to register for the webinar below. These fill up at 1,000 people, and they are filling up each month. So click to reserve your spot and make sure you join us. And if you need to know what's happening in your local market as it happens, go to altosresearch.com, book a free consult with our team. We'll help you interpret the crazy market for your buyers and sellers to be properly informed. Please join us. More next week.